Talk of inflation seems to be everywhere, but should you worry about it or just keep living your life? I'm Scott Todd, and this channel is about helping you to become a better real estate investor. I've seen a lot of talk lately about the coming inflation and hyperinflation and all the economic doom that the inflation will bring with it. But look, I'm just some dude living my life, making a few YouTube videos, and I don't really have any superpowers to stop it. So why not just let the economic geniuses deal with all that stuff, and I'll just keep making my videos and living life. But then I spoke to my buddy Frank. You see, Frank's an old school real estate investor. He's been around a long time, and frankly, he knows a thing or two because he's seen a thing or two. And he told me that those that do not have an inflation battle plan are going to get crushed. After talking to Frank, I started thinking, wow, am I about to get crushed? Because I don't have one of these battle plans. I started searching my financial immune system and realized that one, I've never had a plan. I've never even had an inflation vaccine. And two, I've never really experienced inflation as an adult. You see, the last time inflation was prevalent in the United States was in the 80s, and I was just some kid in school. So I figured I'd better figure out this battle plan thing and fast. But first, I think we really have to understand what inflation actually does. Inflation, as you know, increases the price of goods and services. And it turns the dollar and it shrinks, it makes the dollar weaker and it shrinks the dollar's purchasing power. So, we want to go buy something and, well, it's going to cost us more money to do that. When inflation rises, consumers have they can buy fewer goods. The input cost, for manufacturing goes up and revenues and profits go down because expenses and costs are more. And as a result, the economy slows down until the stability returns. But we also have to know that the only cure for inflation that anybody's figured out is for the government, or specifically in the US, the Fed, to increase the interest rates. In this aspect, you see, the US government is our friend. Why? Because think about this for a minute. The United States government today has more debt than ever before, $30 trillion worth of debt. They do not want interest rates going up. They can't afford it. It will be a train wreck, an economic train wreck. And speaking of rising interest rates, well, remember that as interest rates rise, well, bond prices, they go down. So bam, right off the bat, we know for a fact that we do not want bonds in any type of portfolio. Bonds, gone. Also, when we're thinking about interest rates, we have to remember that adjustable rate debt like credit cards, those rates are going to go up. And as those rates climb, that payment is going to kill you. So during inflationary times, you do not want to have any type of adjustable rate debt because the payments can just change on a dime as the rates go up. And once inflation has its grips on the economy, the unemployment rate will start to increase and businesses in general will start to decline. So as a person, we want to make sure that we have an emergency fund. We have zero or low credit card debt. I think that's a smart strategy. And in fact, it's Dave Ramsey approved. But what about stocks? Well, since the economy is slowing, the stock market is going to be on sale. As the economy slows, people are spending less, the value of the stocks will probably decrease. So it will be well poised for to buy because the stock market's going to be on sale. We'll be able to buy companies at a discount. The whole thing's going to be on sale until it starts to improve when the inflation breaks. So now that we know what we don't want around us, what assets will hold strong in periods of inflation? Well, the best known assets that you can hold during inflationary times are real estate and also gold. Now, there's a lot of talk about Bitcoin and whether we should hold Bitcoin or not. And there's a lot of people saying that Bitcoin will in fact be a good hedge against inflation. Even though Bitcoin is new, it's never gone through an inflationary period. It could hold true. We just don't know yet. It's an unproven asset. So with my battle plan in place, I called Frank to see what he thought. I went through all of the details of my plan, what I liked in my portfolio, what I didn't like, and for the most part, it was well received. While he liked what I had, he pointed out a few weaknesses that needed to be addressed. He strongly suggested that I consider refinancing any debt that might come due in the next few years, while refinance it now while the interest rates are low. And since Frank is involved in a lot of commercial real estate, he pointed out to me that if you're selling commercial properties during inflationary times, the buyers of those properties are going to expect higher cap rates, which will in turn lower the sales price of your commercial property. So pay attention, all you guys buying assets with very low cap rates that think you're going to sell it during inflationary periods. So here's my plan. 1, no adjustable rate debt, no bonds, keep buying real estate. Consider adding a little bit of gold. I'm going to keep my course on Bitcoin, which I talk about in this video. And if you have any balloon debt that's coming due in the next few years, you might want to think about refinancing that debt now while you can still get low rates. And ideally, you want to refinance it for the longest term possible. If you can get 10 years on that, go do it, or more, go do it. You should also be ready to buy some stocks on the dips if you want to be involved in the market. And also remember what Mike Tyson said. Everyone has a plan until they get punched in the face. So be sure to watch this video to keep growing as an investor. And you know what? I'll see you next Saturday.